Let's talk about the next trillion-dollar opportunity in the AI stock sector. And specifically, let's talk about bottlenecks because it is the bottlenecks. It is the sectors where demand is outpacing supply, where truly the real opportunity exists. One of these we know we've talked about a lot, and I've covered it in depth in my channel. It is number 2, middle column here, memory. We're going to talk about the memory in this video, but it ironically is actually not the biggest opportunity. I'm going to share with you the biggest opportunities, the other 2 AI sectors where there is so much demand and the supply simply is not going to keep up. It is these bottlenecks that present to you and I a $1 trillion opportunity to own these stocks. And I'm going to share with you 7 or 8 stocks that you need to be looking at and that you should consider adding to your portfolio. These stocks are the ones that you need to own, these AI stocks. If you're new to me, my name's Austin. Please, please, please hit that like button and definitely hit that subscribe button because I'm building an AI stock community here, covering memory, covering different sectors, all with the eye and the goal, the eye towards helping you make more money in this sector. Let's jump into this. Okay. So look, there's 3 bottlenecks that shape up AI's next $1 trillion opportunity. We're going to talk about the middle one first. We're going to talk about the one that we all know, memory. I've talked about it at length here on my channel. And this also is an area where you need to remember this. As we look out into the future, as we look towards 2030 and 2033, and we look at where all of the money is going to go that is being spent by the hyperscalers, Amazon, NVIDIA, Meta, so forth, the vast majority of it's going to flow into these 3 areas. Okay. And really that's what we need to we need to key in on this. So memory is currently the biggest bottleneck. We all know it's very, very well publicized. There's 3 main competitors, SK Hynix, Micron, Samsung. They control 89/90% of the HBM, DRAM, and NAND market. Okay. And it is the biggest bottleneck. It's the one that we all know. And I mean, I'm not putting anything down as it associated with the memory AI stock sector. I love Micron. I own it. I'm buying some SK Hynix this week, so forth. Okay. Agentic AI, though, is what we need to shift our focus towards, because as AI shifts right here below this title, see this right here? As AI shifts from training models, LLM, large language models, to running billions of AI agents, which agentic AI is the next massive wave, and it is AI agents. There's 3 infrastructure bottlenecks: CPUs, memory, and networking. And inside of that is where we're going to dig in, and we're going to expand on this and talk about this. So continuing down this memory path real quickly, I kind of jumped to the middle one because it's the one that a lot of you in my audience already know. And you can see agentic AI needs right here. Let me zoom in on this a little bit. Agentic AI needs HBM, DRAM, and NAND storage. Manufacturers shifting capacity to HBM, reducing supply of traditional memory. But again, key here is that 2 demand curves are colliding into one constrained supply chain. Okay, because we now have a need as we look towards agentic AI. It is going to need more DRAM and NAND storage. HBM is still very, very important, but it's going to need all 3 associated with the deployment of agentic AI. And the agentic AI market in general is looking to be 3x larger than the training models phase of AI, which is what we've been in, the LLM phase, all right? 3x. So Micron is standing tall there and looking to benefit. SK Hynix will benefit as well. Samsung will benefit as well. So Micron, probably the top company to watch as it comes on with, the deployment of more DRAM and NAND memory. Okay, so let's jump back to this and kind of talk about things. So we've got that $5.5 trillion Capex. That's the number that's targeted to 2030. Okay, the capital is committed, and I want to really reiterate this. We constantly every week see on Wall Street messaging coming, the questioning of Capex expending and all that kind of stuff. And I've talked a lot about this on my channel. Guys, this is not something you need to worry about. If we do get if we see the hyperscalers and or enterprise clients like General Motors and Ford and, big companies start to change their messaging about how much capital expenditure dollars they're going to deploy to AI, then that is a different equation. But nobody, I repeat, nobody is saying that right now. Okay. So I want to really reiterate and stress that. Okay. So kind of going back here. So the money is spent, and what decides who gets paid is all about a supply constraint and binds first. The shift from training models to running agents is rewiring all three markets: the CPU market, the memory market, and the networking market. Okay. And by the way, it is the networking market that nobody's really talking about from an AI bottleneck standpoint, and probably the biggest opportunity out of these three. Okay. So continuing on, you need to understand how agentic AI works. Okay. And right here in the yellow is really where it comes down to. So agentic AI agents behave like people. Each agentic AI node, if you will, needs its own compute, the chip, needs its own memory, micron, and constant communication, networking. That inverts the old hardware math and drives outsized demand into three categories: training treated as afterthoughts. Okay. The market is shifting, and I don't think that Wall Street has quite caught up yet, at least as far as what their messaging is out on the street. And that's why I think this is so revolutionary. Okay. I've already mentioned this. The agentic area will be roughly 3x the size. And by the way, the company that produced this is Spear. And right here, it is Spear. They're naming right. Where was that? Oh my God. Right here. Spear Investing. Okay. Go back up here really quick. That's the company produced this report, and I agree with it 100%. Okay. So 3x the size of the training models. So CPUs are the most underappreciated inflection. Okay. The agentic ratio moves towards one CPU per GPU because every agent needs its own orchestration. So let's go back to this graphic. Okay. And now let's focus on number one. See over here on the left. This is a bottleneck. Well, Austin, NVIDIA is there and all that kind of stuff. Yes, I know, but we're talking about a seismic shift in the CPU market as we move in from LLM AI, large language models, training models, if you will, towards agentic AI. CPUs are becoming more important. Okay. CPUs from companies like AMD, Intel. Agentic right here. Agentic AI requires orchestration for every AI agent, driving massive CPU demand. The CPU to GPU ratio is moving closer to a 1-to-1. Historically, that ratio has been the other way. Okay. Key points. One CPU could manage dozens of GPUs. Now, NVIDIA is the winner in the GPU space. Don't misunderstand. NVIDIA is also moving into the CPU space as well, and it has been for a while. One CPU managing dozens of GPUs. That was inverted. It was the other way. Now with agentic AI, it's going now towards CPUs during the training boom. Okay. Now every AI agent needs its own orchestration. CPU demand is set to accelerate dramatically. Okay. Market outlook. Today, the CPU market is a $35 to $40 billion market. By 2030, over $200 billion is how big that market will be. And it is most likely we're going to run into a potential bottleneck in that scenario from these potential winners: AMD, Intel, and ARM. So let's take a look at those. AMD right now, this is current market value, up about 3.4% in today's current trading session. So you can see that. Ticker obviously is AMD. By the way, I'm going to be covering AMD more on my channel. ARM Holdings, ticker is ARM. It's down about 4.6% today. So look into that one. Obviously, Intel. You ever heard of Intel? Probably have. It's up 5.67%. The entire kind of AI tech stock space is moving back up. We had a really good inflation print report come in today. So that's why you're seeing kind of things move in the right direction that way. So again, as we're looking towards these AI bottleneck spaces, look in the CPU space. All right. And so kind of in the model here, it is networking that it stands to be kind of the most underappreciated, biggest investment opportunity right now. We're going to get into that here in just a minute, followed by CPUs, and then kind of third by memory. Again, don't misunderstand what I'm saying. Well, Austin, are you saying memory is the last? No, that's not what I'm saying. I'm saying that memory, if you're looking at these three spaces, it's already very, very widely well known about the memory shortage compared to demand, right? And I think it's a lot of that's already built in. I think Micron still is the winner. I think we're going to see Micron go past its $1,500 price target and on its way to 2,000. SK Hynix was going to lift, et cetera, et cetera, et cetera. But if we're looking for and trying to identify those opportunities that may be underappreciated / undervalued at this time, it is networking followed by CPUs, and then thirdly, memory. Okay, we're going to again jump and shift here. Okay, kind of going back over here to kind of finish some other things. So CPUs are kind of one of the ones that we need to again think about. Okay, so before we move on to networking, a few final thoughts around memory right here. Gross margins have nearly doubled to 80%, unheard of for a business that historically earned 30 to 50% in good times and went cash flow negative in bad ones. We've talked a lot about this on my channel about how historically memory has been very cyclical, prone to a lot of production and chips sat in warehouses and then had to be discounted, which eroded price and eroded margins, all those kind of things. Prices are up 7x from the cycle bottom, flowing straight to Micron's bottom line and straight out of the budgets of NVIDIA, Alphabet, Microsoft, the hyperscalers, right? Continuing to move on. And again, this drive is structural. It's agentic AI. So memory becomes that really core key component right there, sitting, peer and level with the semiconductor space. All right. And again, we talked about the fact that two demand curves that have been independent are colliding into one constrained supply base. Micron, CEO sees, quote, no line of sight when supply catches up, particularly in HBM, and we think the squeeze runs into 2028 and beyond. And remember, Micron has locked in those 16 strategic customers, $100 billion in revenue committed and combined through 2030. We know about that. Memory has always sold as a spot, which is the reason it traded at a permanent discount historically for cyclicality. I can never get that right. Multi-year fixed pricing, exactly what can dampen the downside and why the market is debating a re-rating. I've talked about this at length about these 16 strategic customer agreements, how it's changing the cyclical nature. And ultimately, the AI boom is completely restructuring the memory sector and moving memory away from a commodity scenario. Okay. But key here is, and I want to stress this, is where this particular article and this particular Spear Investing talks about the proof only comes from generating cash through a full down cycle, which Micron has not gone through. Okay. And we may not really see a down cycle. So that's something to consider, which is still a cycle away. Agreements do cut both ways. Customers could walk if the build out slows. Now, we don't know all the finer details of these customer agreements. There's probably some type of get out clause if those companies should so desire. But I'll remind you that part of the strategic customer agreements that Micron put into place, it moved those companies to the front of the line. Do they want to give that up and lose their space as far as memory? Think of a company like General Motors or Ford. Are they going to walk away from crucial components, memory components from Micron that need to go into their cars to ship their cars? Are they going to walk away from those agreements? No, I don't think they're going to. But it is something that is relevant. Okay, so this particular report talks about three other really good opportunities, and they call them the picks and shovels, kind of associated with the memory space. And we need to look at those as possible ones that you should look at maybe getting into. And this is again, kind of some golden nuggets, if you will, from possible investment opportunities. And I'm going to be looking at these myself. One of them is KLA right here, KLA Corporation. Again, kind of that picks and shovels associated with memory, but it's not a pure memory play by like owning, for example, Micron, SK Hynix. Okay, so KLA ticker is KLAC, currently up 4.6%. You see that right there. And if we look at kind of the 1 month chart, you can see this dramatic move up. I mean, it has just moved up dramatically. Okay, all right. So KLA, another one mentioned again, the kind of that picks and shovels scenario is Lam Research. The picks and shovels associated with the memory space. Ticker is LRCX. Look at that one, up 5.5% today. And on the 1 month chart, again, just that major swing up, kind of continuing to move. But we're on a little bit of a downtick there from its high, 436, currently trading at around 347. So you'd be picking it up at a little bit of a discount right there. And then the other one was Applied Materials. Ticker is AMAT. currently trading up in this session 3.9+%, trading at 597. If we look at the 1 month chart, similar graph, right? That kind of looks similar, doesn't it? But you can see right here, it's high 709, currently trading at 597. Again, a little bit of a discount off of that peak we've seen in the last month. So there's kind of three associated with the picks and shovels aspect, which I really, really do love, associated with the memory, kind of the memory sector. Okay. All right, moving on. Okay, so let's jump back over to our graphic here and now shift our attention to the left side, the right side of this, and talk about networking, which quite frankly is the one that nobody is really talking about, associated with a bottleneck, a $1 trillion bottleneck opportunity with the AI infrastructure build out. And part of that, those 5.5 trillion Capex dollars that coming, a lot of them are going to go to this space as well. So networking may be the biggest opportunities as AI agents constantly communicate, right? There's constant communication, data movement explodes, and it's going to explode, and network infrastructure becomes critical. Think of it this way. In the LLM space, the training model space, which is kind of where we're in, and we're moving out of that space and moving more towards the agentic AI space, that LLM, it wasn't as much of a constant need for data to move. Yes, it was, but not like we're going to see in the agentic AI space, which again, it's just going to be constant communication. I mean, the network traffic is going to increase, X. Okay. So the key point here is you want to focus on companies enabling both copper and optical networking as far as the physical cabling in the data centers. There's a lot of discussions going on about, is copper better? Is optical networking better? And you should look at it like, I don't care which is better, because by the way, a lot of these data centers have both. Okay. So you want to look at this, go, okay, from a key point standpoint, optical component manufacturing lead times right here continuing have stretched. We're starting to see the lead times for the companies who are delivering and developing this technology is stretched. And if we look at what some of the actual cabling companies are, let's take a look real quickly right here. So you look at some of the suppliers right here on the cabling side. It's Corning, it's Lumentum, Coherent. I love Corning. I've done some videos on Corning. Those are suppliers in that part of the stack as far as the cabling goes, the cabling stack goes. All right, moving back over here. Fiber prices have risen 50%. We're starting to see that, right? Fiber, the demand is outpacing the supply. So fiber prices have risen 50+% since January. And the optical networking market could eventually exceed $150 billion. Remember, we're trying to identify opportunities here in these different AI bottlenecks, okay? Top companies to watch, Credo and Astera. So let's take a look at their tickers and what's going on currently with them. So you can see Credo right here is in today's trading session up 0.27 percentage. You see right there. And on the last 1 month, you can see pretty significant move up. We've hit a high in this month of 270. We're currently trading in that 230 range. Again, so not as much of a massive run up as maybe we saw, in kind of the picks and shovels for the memory space, KLA, Lam, Applied Materials. Okay, so that was Credo. We saw that one. And then Astera Labs, ticker, when the screen will load here, Astera Labs, ticker is ALAB right there. And we're up 1.4%. And on the 1 month chart, you can see pretty significant move up in the last 30 days, where we've seen it move up from a price in, prices, quite frankly, in the $50, $70, $50, $60, $70 range, all the way up to $480, right? And now we're trading at $373. So you're seeing that people are already starting to identify that these are pretty key players in this networking space that we need to possibly be looking at as far as kind of that AI bottleneck space goes. Okay, so let's wrap up with a few final thoughts here. There are definitely companies that I think are the bigger opportunities. And I think the potential winners are in the networking space, Credo and Astera Labs. I think in the CPU space, it's AMD, Intel, ARM. And ARM is really a good one there. And they kind of on the picks and shovels front associated with the kind of that memory space, not necessarily pure plays like Micron, Escor, and or SK Hynix, not dissing those. Okay. Just giving you other opportunities kind of in that picks and shovels. Again, we talked about equipment companies to watch, Applied Materials, Lam, KLA. Remember, the bottom line here in the lower right-hand corner is that the next phase of AI is agentic AI. No one disputes that. It is coming. And it fundamentally shifts and changes the nature of where a lot of those CapEx dollars will go. And it will go to these three sectors: CPUs, memory, networking. Those are the three phases that are making up a $5+ trillion space heading into 2030. There you go. Thanks for giving me a few minutes. Appreciate you. And I'll see you down the road.